Hugo wants 200, baby.
You ready to get back to the trading action?
You aim, you shoot, and make money.
It's going to be a great day. You guys know where you're at.
All right, ladies and gentlemen, boys and girls, looks like our good pal Money Mitch is having some internet problems today, so he's battling with his internet. We'll see if we'll be able to get back up and running there, but looks like my microphone might be grabbing the wrong microphone. Let's change that there. Oh yeah, AirPods. That should be a little bit better. Let me up here, right? Looks like everything's changing on us, right? So we're getting everything fixed back up here. That's all well and good. We got that going. So what a day in the market. We got another big earnings report, another big news report that just hit. It wasn't CPI this time, it was PPI, which isn't as interesting. However, it is moving markets a little bit. So we're going to get in, we're going to show that. We're going to keep doing the same thing that we always do. We're going to be trading the markets. We're going to be taking a look around, see what's going on in different markets, and we're going to be scalping individual equities. As always, I've got kind of my list I'm building up. I'll build that up with you guys as we go. We'll talk about what's happening here in different markets on different time frames, because as I'm watching the SPY right here, things are starting to get a little bit interesting. So let's add this here to the stage. We can go, we can do that side. That's nice. So right here is where PPI came out. So initial interest, obviously, in PPI, nice push higher, and then it kind of gave it back right away. Now we're grinding a little bit to the upside. So this is definitely something we need to keep our eyes on, because I think this is going to kind of be the theme of today. So yesterday we talked a little bit about how important it was that we had bounced in this zone, in this area right here. We had a nice little, now 3 bottoming tails in a row. So a nice bounce yesterday, closed, with a red candle, but certainly up on the day. And we saw some good relief bounces, and things like the Qs actually looked much better. So we had some big cap tech actually doing pretty well here. So that's what we want to see. IWM, or small caps, was doing okay. RSP, however, our equal weighted S&P 500, actually relatively weak. So this shows basically that there was just, this rally was led by big cap tech. So big cap tech's leading us down, maybe big cap tech's leading us back up. So we need to take a quick look at to see what's going on there, to if that's going to continue or not. So as always, I've got my little, let's go and grab INTC, 2 minute. I'm going to build a list. Usually I do this off screen while Mitch is doing his own work and prepping you for what's going on throughout the day. But because it's just me, let's kind of go through some of these together. So I have a scanner down below. I'm going to go through that scanner. We're going to look for things to fade up or down in one direction or another. I don't have the account all set up yet. However, I do have something to share with you guys. Hold on, let me get this in. Exciting news. So see if I can just bring this in. So yesterday I got this email, which is a great email to get. Clipboard. Boom. So here we are. I have passed my first Trade the Pool funded account. So I am now a funded trader over at Trade the Pool. Later in the day, if we have time, I'll kind of break down my dashboard and show you what I did to get there. It was good. I was very excited because, as I've been very open, I'm a systematic swing trader, not a great day trader. So I had to build some systems to do that. We did that all live, right? I showed you some back tests. I showed you me trading these names live. I traveled all the way to New York to talk to some good traders to get some ideas there. So just to show you guys, right, the challenge that you can go through. But if you end up doing okay, that's the result. You can end up getting a funded account. And again, I was very, very happy yesterday when I achieved it. We'll talk about the trade that got me there. I held on to one for pretty much the maximum profit that you can grab. So I got kind of lucky in that bounce that happened in the market where it's a pretty large gain. But again, so I'm going to keep doing the same thing where I've got to wait for, I guess, some KYC stuff and all of that, make sure everything's above board. But I'm going to just continue, obviously, doing the same thing, much smaller now that it's a real account. I just want to scalp out a couple bucks here or there, build that cushion. But again, we'll go through that. So the idea is we're going to do the same thing. So we're going to take a look here on, there we go. So again, the plan, for those who don't know, the system that I kind of came up with is you're looking for stocks that are gapping higher and you're looking to fade those gaps. You're just trying to look to say, okay, this gap not necessarily will close. The gap's not overdone necessarily, just off the open. Sometimes you get this kind of flush of profit taking come in, or in this case, you get people trying to short and see if the gap's going to move lower, and you're just trying to capitalize off that. That's the basic premise. Of course, now that I've got one strategy, and that strategy went okay, uh, the two things I want to do is one, completely automate it. That's always, as soon as I have a strategy that works, I want to automate that entirely. I'm just waiting for some kind of tech things, but that's something that I'm sure we'll go over soon. That's really cool. And then after automation, it's time for the next strategy. The more strategies you have, in my opinion, the better. The more trades you do, the smaller those trades, the more trades you do, I think the better. So the first target for fading, I think today is going to be Intel, right? We have a big gap up, but this thing's just been a dog, right? I know everyone's excited. They got a new CEO. Could be good for them, but we're still on the long-term chart. We're still stuck in a range. People who had bought down here, there's a big level of support down here. These guys are loving life. You go to sleep and you wake up with something with Intel up 12% on the day. Maybe you're going to hit the button, take some profits. Again, I'm not looking for this gap to fade and the whole name to fall apart. We're scalping here. So I'm looking for, on the open, some of these blue arrows to come through. So what I do is I add this to my list, and then I I point this little indicator that I'm working with all of the AIs to alert me for when this on this list. Now alert me when there's a little blue arrow. There's a little blue arrow. I'm going to look to take a short. Again, the idea is that's really helped me out is taking many trades, just taking them smaller. So that's one thing. Next target I'm looking at here is DG, Dollar General. Nice earnings. So earnings kind of missed across a lot of fronts. We had both a earnings surprise, but a revenue beat. So I guess that's mixed. But again, you look at the daily chart on this, a lot of these things are beaten up, right? So these are horrible names, sold off into earnings, and now is getting a little bit of a gap. So as long as it stays under this $83 area, could be an interesting short there. So that one is going to go on the list as well. This CRVO, I'm still scared of these, right? I generally do it through those big gap strategies. The I like the bigger names, the more liquid names for me personally. These are ones that I find that there can be way more momentum behind. Something like Intel isn't going to double today, right? Intel isn't going to go through the moon. It might be the low and maybe we grind higher, but it could be just a little bit of a potential double here. So, right, this is one of those ones that this could double today. These things are pretty crazy, but I am going to just add it to the list and then watch them as well. It might just be one of those that if it's a crazy move like this, CRVO, that I just take them smaller. That's one of those things that I have to kind of play with. But again, I kind of treat trading a little bit more like a scientist, right? I have a strategy. That strategy seems to work. That's fine. Put that in the books. Try to continue to grow and change and do all that kind of stuff. However, but the I'm gonna keep building out this strategy and trying to improve this strategy, but then also we're gonna be looking for the next one here. So path, big gap down, and you can always click this button on TradingView, see the news, little AI summary, earnings. The earnings seem good, and but big gap down. Spent the whole morning under VWAP, so looking for this one to fade through VWAP as well. So we'll put on path. And then always want to check the daily chart. This one's just getting obliterated. So again, this is a pretty bad company, but what we're trying to look for is, again, just little intraday scalps in through here. So, so how I'm doing this, and I can show you this here as well. Right, I have this scanner, and this is just from Trade Ideas here, which is one of the partners over at Trade the Pool, and I'm able to sort the gaps by standard deviations. Something I'm trying to replicate on TradingView, and I'm sure you can as well. But the reason I'm sorting them by standard deviation is sometimes a 10% gap on a name might be a big deal. Sometimes a 10% name gap on a name might be nothing, depending on how much. So what this does, it basically looks at like Bollinger Bands, and it says how big is the gap outside of the Bollinger Band. That's what we mean by standard deviations. So that's what that BT is here. So that's where INTC, DG, and CRVO, because these are 2 to 3 standard deviation gaps, which just means they're really rare events for this particular name. And then I'm going to start looking at these, and anything over about a 2 standard deviation gap, we're going to take a look at here as well. So that's the premise. So you can see how this is very, very systematized, right? I'm going to go through these. Any ones I like the charts on, anything I like the name of, they go on the list. I wait for the alert. I take the trade. So that is how I have been able to become a funded trader. Again, I wish my account was good to go today. I was kind of excited to trade live, but I guess I got to take a look through some things, or I got to sign some documents or something like that, but we'll get to that. So Adobe, gapping down here on earnings, and then gapping to this low as well. So I like the look of that one. And check out the pre-market action again, riding under VWAP. That's what I want to see, because I want those shorts to be making a lot of money so that they're very happy and looking to hit the button and cover. Sentinel one, this one looks good, but it's already done this break. This is why I talked about maybe exploring some of these trades in the pre-market. You can see some of the arrows started to come through here. I probably would have taken when things got liquid, maybe after 8 my time. So that or sorry, 8 Eastern. That might be a good time to take a look at these names, because sometimes you could be done by the market. So I doubt I'll get a trigger on that, but we'll add it anyway, just because, again, I do like the daily chart oversold here. AEO is the last one. So American Eagle Outfitters, just what a chart. Bleeding down, 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 down. Another earnings play beat on top and bottom line, but must have said something in the earnings call that no one liked, because we're down again. So with the 2-minute, and again, this is one of those that I don't think I'll get a trigger on because it's a little bit too late, but we will add it to the chart anyway. Should be a hotkey to add these to the symbol list. I'll look at that. TradingView is usually pretty good with its hotkeys. Bam. So that's the list for today. So Intel, we're looking for, again, fades on all of these. DG. You can see this little box that I made here with ChatGPT. I need to go and tweak it a bit, but this is where my risk sizing is going to be. So I was risking like 100 or 150 on a trade when it was in eval. But now that it's not an eval, the plan is just to dramatically shrink that, right? And to build up this cushion over time now that it's a real account. So I'm going to be risking about 25 bucks a trade. And the other thing that, again, the difference between this eval and all the other ones that I blew up is that I did, you guys kind of heard it. I said, I'm going to take way less size and just more trades, and we can go from there. We can take a look here at all of those numbers too as well. Are they not? Oh, it's this one, right? Just trying to find the one to share. Yeah. So let's just do that. We got another 15 minutes till the open. We'll let the market settle a bit after that number, and then we'll go through. So I have to stop share, and then I will present window this one, and then add to stage. So this is it. So again, can't complain about the equity curve. I got one big pop on a TSLL trade on a couple days ago, and then just kind of grinded for a little bit. And then yesterday on this iRobot trade, I was able to hit that as well. So these numbers are not numbers I expect to continue with an 80% success rate. But again, I'm going for 1-to-1 because I just think that's kind of where my life is going to be. I think that's going to be kind of the best way to do it. If I do that for a while and that ends up being successful, maybe I'll start to kind of irk that to maybe 1.5 or something. But again, the idea is scalp, scalp, scalp. So open trades, no data. You can see some of the closed trades here, and that was the iRobot trade. So we'll go through that because we talked a little bit about that as well on yesterday. But that was the one that really kind of hit the limit there on iRobot. I was able to go and again got a little lucky with the bounce of the market, but it was, you'll see it's purely a systems trade the way it should be. So we'll talk about that, and we'll use that kind of as a model going forward. Now, and I also talked about this. I'm going to start journaling all the trades now that it's a live account, every single trade, and then open the journal up to you guys so you can see that as well. But let's unshare, and we'll go through this, and we'll go through the iRobot trade, and then we'll take another look at what's happening here in the overall markets. Boom. All right, so iRobot, IRBT. So I talked about how I was watching this. You can go back on yesterday's VOD. And again, the idea is the same. This thing spending the entire morning under VWAP, broke through here just by a tick, but I didn't end up taking that. So you can see one green arrow and then fade it back down. And then I said, hey, I'm just going to set an alert and say, if it breaks VWAP, it's going to alert me. And it did. And I was still actually at my desk there. You can see we end at 11 Eastern, and this was just like 11:10, right? So it was right after I was doing a video for my personal channel and just doing some work. So I was still at the desk. I got the alert, took the trade. So the idea was very simple. I wanted to buy it kind of right here, right at that arrow. And then my stop loss was just right below this zone right here. This is the stuff that will be, when automation comes, I'll have to figure out, because technically I'm just going to use a low a day or high day stop, because again, if you're automating things, you can't be super precise. But I decided to risk this amount, and I'd already taken some good trades on the day. You guys saw, I forget some of the names, but I think I took a rocket trade. I took 2 or 3 good trades, so I was already up a couple hundred or so on the day. So I said, you know what, I'm going to risk today's profits, or at least the large majority of today's profits on this trade, just because this looks so good. And me and Mitch were talking all day about how we kind of felt a market bounce was coming, and a market bounce came at the same time, and it moved all the way up. I don't have the 2-day view app on the charts right now, but let me actually draw that in for you. So we'll just plop that right there. And you can see again, the target is about the 2-day VWAP. So what happened is it popped up a little bit, and then it put in this sideways base, feeling a little frisky or something, we could say. So I actually bought more right in this zone right here, because I could raise my stop under this low. So I could buy more, and I could raise up my stop, and then I could still have a kind of a break even trade, because if we end up breaking that 2-day VWAP even by a little bit, that was target on the account. So I'm like, okay, so now I'm risking nothing. I can add to a winner on that, right? And if I add to a winner, I can move my stop up to break even. It's either going to be a break even trade and I walk away in the day with the other good trades that I had, or if it got to this area, that was target for the account, right? So I'm watching the account. It's like 1350 you have to make. So I'm watching it, that number tick up. And when it broke through here and it broke through the 2-day VWAP, that was the exit for the trade. And just to say, all right, time to go. But that's going to be the ultimate target for this setup. So when this is fully automated, when I can finally do that, we're going to have this. It's going to be just VWAP to VWAP, right? So we're going to target that VWAP. So same with what RKT yesterday. So RKT, the idea was, let's get rid of that. I don't like that it's drawing that. Let's go to this. And right, it's one of those, you had a little cushion, so you could take a little bit of a shot. So RKT, put in that there. So this purple line is the 2-day VWAP. So I bought Rocket off the open here. I think it was like in this candle right here, right? Broken through VWAP, spent the whole morning under VWAP, gap down. So this again, just going over because this is the setup. Broke through VWAP. I targeted 2-day VWAP, would have been the absolute target. I got out of that a little bit early. I'm just because I'm going for 1-to-1s right now. And I took 2 or 3 trades like that. And I think they all ended up working out because the other one was NVO, Nova Nordis. Right. So I took that one right here with a stop at the low of the day. And that was moving at the same time up as iRobot. So both of those things were getting me closer. So really it was I exited because that got me the account. But the idea is that for this one, right, we're targeting the 2-day VWAP. Now it never really got there. So, that's why I'm going for, again, 1-to-1 risk reward. Whatever my risk is, that's kind of what I'm targeting. The idea is if I can stay very, very small and I can keep doing that over and over again, as long as I have a greater than 50-50 win rate to do commissions, then we'll go as well, right? Yeah, and then, right, 2-day VWAP, right? We talked about this on the SPY yesterday, and we said this was going to be an area of interest. So that's the 2-day VWAP. And you can see you had a couple nice scalps here. So this might be, again, I'm always thinking the way I look at trading is you come up with a plan or a strategy. You prove that strategy has merit. You systematize it as much as possible so you don't have to do it anymore. And then you do the next strategy, right? And we talk about this, me and Mitch, all the time, where you don't have infinite amounts of bandwidth. So the question is, do you want to spend your time thinking about the next trade that you absolutely must take? Or do you want to spend your time thinking about the next great idea that could make you a lot of money, right? I want to spend my time thinking about that next idea. So the more I can have robots do this, because right now that I have these plugged into the system, eventually, if we get some ability to kind of link TradingView to the Trader Evolution platform and those things can just trade for me, then great. I don't have to do those anymore, right? But when we came down the 2-day VWAP on the SPY, we bounced here for a while, and then we broke. And again, me and Mitch were talking about this. We were hovering above this yesterday's low. When we got back through the pre-market low right there, which was right in this area, that's where things really got going. So that's where also those 2 trades really got going. So this 2-day VWAP thing is something I'm going to explore, and that might be the next strategy, is buying things that kind of gap up or gap down, and they pull into that 2-day VWAP, buy them there, right? So again, that's my process. It's what I do from the swing trading point of view. Is I watch the market. I still have a very small discretionary swing trading account that will make beer money. Maybe by the end of the year, we'll buy a hot tub or something if I do really well on my discretionary swing trading account. But as soon as I come up with an idea, that idea works, I sit down, I back test it, I try to systematize it the best I can, I get it, then I consider it kind of out of my life. So it just kind of gets traded as well. So, and yeah, so like next, for example, Rando, I guarantee you I will get to it at some point. I am just very busy. The has an idea for test or doing opening range break trades. So if that works, then I want to add that strategy in, because there'll be periods of time. This particular AVWAP fade strategy, I would imagine, and I think the data will hold that true, is going to work really well when there's a lot of volatility and a lot of gaps. So earnings season, I think, is going to work great on earnings season. Is it going to work great when there's no earnings season, right? Come August, is this just going to be the most frustrating strategy in the world because there's nothing really gapping from the large cap space, and that's when the markets are slow? Then I better have other strategies to trade, right? This thing might end up losing money or not making money, so I better have other strategies. So the co-host of my podcast that does systematic trading, he has, I think, 40 day trading strategies, and they're all systematized, right? So again, it's now that I have the strategy done, now that I have my list filled out, it's just you're gonna see the alerts come in. I'm still working with ChatGPT to really nail down those alerts. The alerts will come in. If they look good, I will take a trade. We'll move on to the next one. The trade just will happen eventually, hopefully, just completely systematized. And I don't really even need to be here for it. And then it's all about what you're freeing your brain up to do. By systematizing your trading, you're freeing up your brain to see the next trade. Where the problem that I have and the problem that occurs is that if I'm hyper focused on every tick of the market all the time looking for that next trade, you're lost in the forest for the trees, right? So you're not seeing the whole world that kind of exists out there, and you're missing the next idea. So, right, me and Mitch have talked all the time about this liquidity grab idea, right? Where you're looking for maybe on a 30-minute chart. He keeps saying hourly. This is something that me and Mitch will, I think, do battle with at some point. I hate hourly charts on a market that's open 6.5 hours a day. Triggers me, but right, these undercut and rallies on the longer term charts. If I have the VWAP fade strategy systematized and just working for me, then I can spend all my time and energy throughout the day looking for and finding and trading these things. And if I can end up trading them successfully, then I know I can move them on. So I'd probably open another eval account and trade take these eval accounts as almost as if they're paper trading and play with new ideas in eval accounts. And then if they end up working, moving those into a funded account. So you test outside, you test when it's all fake, and then when it's real, you size them down and then you go from there. Because the idea is, like we talked about yesterday, every day I want to max out my buying power with different ideas, right? TSLL was another one that helped me, not yesterday, but the day before, helped me pass. Another one that I took here in the afternoon as it kind of went through this area. Another trade as well. So this was a good one. You'll see on, I'm going to do a full interview with the fearless leader, and I told him next time let's get going on those swings, and I'll start to bring over some of my swing systems from my personal account to trade the pool, because why not? Why not trade someone else's money? So that's next on the agenda. Is get a couple more day trading strategies in, and then go from there. So yeah, so thank you for the ORB strategy. I know that's a common one. There's a big paper written about the ORB strategy. Again, something I want to, right? It's for me, it's diversification across assets doesn't make sense because we've all seen it. If the market crashes, we're seeing it now. If the market's selling, everything's selling. But diversification across systems has been proven over time to do really, really well. Which is very hard when you're doing everything discretionary. That's why you have to systematize a lot of this. So again, let's take a look. We got 2 minutes to the open here. Let's take a look at the economic calendar. We got most of that out of the way. Right. So we had my on the right date. It is the 13th. Yes, it's Thursday the 13th. So we have PMI at, that should be already done, right? 8:30. Why is it saying? Let's refresh that. Maybe that's glitched. Yeah, so PMI is done. So the only thing we've got natural gas and nothing, right? You can see these are all ranked very lowly. So there's nothing when it comes to economic forecasts or numbers for the rest of the day. PMI came in light. It's very, very slightly. So it came in 0. So that's good. Again, more what we talked about with our guest yesterday, more fuel for potential Fed rate cuts. If we go to TNX, right, we're seeing actually rates flat again. So I think that's a good thing. I think flat rates is a good thing for the overall market. So we got 1 minute left. We'll do what we always do. We're going to mark the pre-market high, which is trying to learn all the trading view hotkeys. I'm telling you, the more you learn hotkeys, the better. Every time I really have to take my hand off the keyboard and touch the mouse is kind of a failure. So this is the post-market high, and then the low here. But I'm also going to put a little line. That's more of a discretionary one, just right here, because that's the pre-market high, and I think that's interesting. And because Claude, without me asking, removed my VWAP, I'm going to put that on from my indicator. I'm going to put this one right here as well. So this is this purple line. I guess these are lining up, so I'll remove this. This purple line right here is the VWAP from the CPI print yesterday. So you can see that was pre-market high today and moving from there. All right, let's get rid of these as well, and then we will do performance performance today. So we'll take a look here, removing all the things that are doing nothing, and we are open. So the initial drive there is just down right off the open, breaking VWAP to the downside, but we are stuck between this range again. This purple, I should probably change this from purple to something else just to make it easier for you guys. Let's make it like I hate red. Red scares me. Blue. There we go. Oh, that's also blue. Sorry. Orange. There we go. So this orange line, this is the 2-day VWAP, and I've actually anchored it. You can see from the CPI print. So this is the average, the volume weighted average price from the CPI print. And you can see how it already came into play this morning. So to the upside, that's the first hurdle that we need to get through. And then we need to potentially push from there. So again, I'm in watch mode today just because I'm in that zone between I pass the funded account, and then I think they just need to make sure that I am who I say I am, as all legitimate companies do. If a company doesn't do any KYC, you get a little bit worried. So SPY just in the middle of the pre-market range. We look at the Qs, a little bit better relative to VWAP, but still in the middle of the range. Small caps doing better still. And we got Steph trading crazy stuff. OPRX, nice little push up here. So something going on with these, these opening candles. Oh no, that looks right. So CRVO is actually triggering from the short side. So again, this would be a potential short right here with a stop low of the day. And again, this position size calculator I think is great. So that would be 50 shares for my $20 ish risk, my little tiny risk when I get this account going. Path triggering to the upside on that move here. That's a note I got to make. It's funny, I'm making notes for conversations later with AI. That's just the world I'm in. And INTC very barely should have triggered there, but just didn't quite. So the only valid trigger for me would be the CRVO. So I'd be watching this one short. I'd probably just take it here if it spent any more time under that zone. So you can see how it came through. So how much simpler it is trading a system like this than going through millions of charts. This is why you'll see even purely discretionary day traders usually make a list off the open, and they have levels. They're setting their alerts, and they're just waiting for those levels to happen. They're waiting for their plans to play out, and they're taking their plans. I think the problem a lot of traders fall into, day traders, myself included, when I started here, was just hunting all day. Right? These are the setups. These are the zones. Those are the trades I'm planning on making. They either come to fruition or they don't. I either take the trade or I don't. Right? That's what everything's going on there. So far the CRVO pushing down a little bit. We go back and look at the overall market, again pushing down a little bit there as well. So pre-market lows is, you call it 555 even, is a good place to watch. And then 559.50 is an interesting one as well. AEO triggered here. Ooh. So no, that shouldn't have. So making notes to have conversations with AIs later. Who am I going to talk to? I think I'm going to talk to Claude this time. That's why, it's kind of joking when everyone says, "Oh, what AI do you use?" And I say all of them. I'm not lying. I bought from DeepSeek to Claude to Gemini to ChatGPT, just to see, because sometimes one can correct the mistakes of the other one, as wild of a world as that is. So we just keep kind of popping around here. So right, you can see that triggered, but there's no arrow there because I want to see time under the AVU app before the break. So that's a conversation I got to have with the AI, tell them to get to work, right? So all these blue arrows here saying, hey, it's breaking VWAP over and over again. So Dollar General, if the market flushes, that one might be interesting. CRVO, again, would be the only valid trigger. So that'd be the only trade on the book so far. And then the SPY. Oh, SPY found a little bit of support here around VWAP and starting to push a little bit higher. Yeah. So Mitch agreeing with me there. That's the game plan. So I may open up another account. I'm thinking of opening up another account for just um, testing the strategies that we're doing on the S&P 500 or ETFs in general, like looking for it only trades ETFs. The beauty of that is the liquidity will never be a problem. Spreads will never be a problem. Um, but I'm just marking up these levels off the open. So then looking to potentially trade these zones and to come up with a strategy, the same process that I did before, right? Have an idea, test the idea, test it thoroughly. If it passes an account, I'm going to consider that idea good, maybe some tweaking down the road, but it's all about recording the trades when they happen. So you'll see that, and I'll show that process as well, because I think that's where a lot of traders break down. So they have a strategy that's working and then they stop. Can't. So again, going forward, when the account is live, every trade, every day, I will upload into my Trader View journal, and you guys will see those and that process as well. If someone really wanted to be hardcore and went through all of the streams since I started here, what, 2 months ago, 2.5 months ago, it could be a cool little video series of someone who is admittedly not a good day trader to passing an account, and then hopefully getting that payout. Right? There's no success until you've gotten the payout that's covered all of the expenses involved and some, and then you're laughing. So SPY again, just really, really back and forth action. Like the bulls, we talk about this sometimes. Sometimes there's back and forth active action that seems like bears and bulls are fighting, and then there's times that it seems like both parties are kind of hands off, waiting for the next move. This to me feels like one of those hands off, waiting for the next move moments where we've got some areas above, we got some areas below. There's nobody out there who's really excited to take a shot in either direction. So everyone's just kind of chilling. And I think those areas personally are, again, this 595 to the upside, at least this swing low at 556. So 559, 556 are kind of the two areas that I'm watching. So that's a 3-point range. I don't think we can stay in a 3-point range very long, but we could. Dollar General continues to kind of chop around lows. A CRVO would have flushed maybe enough to trigger an out there, but this would be a protect the entry now anyway, right? If it gets and you get 2-minute candle close over VWAP, then just time to go at that point. Half, again, no valid entry yet, but it's pushing down and pushing back up here. If this candle closes above VWAP, then that would be the trade on that. Adobe just falling apart, just completely falling apart. So that might be later in the day. Again, another beauty. Ooh, Sentinel One just rocketed, closed the gap entirely. Didn't give much of an entry. This is one of those that I said you'd have to have grabbed in the pre-market. Which again is something I'm going to play with. I know you have even less buying power in the pre-market, but again, something to play with as the pre-market gets more and more pronounced. And eventually, there's not going to be such a thing, right? We all know the 24-hour markets are on their way. But came all the way up, closed the gap, putting a little topping tail on Sentinel One. So what would be interesting, just from a discretionary point of view, is if we come down now and hold VWAP and then break back through, because that just feels like a bunch of people flushing and saying, okay, oh, finally, I got my money back. Let me get out. The question is, do we dip a little bit and then come back on this Sentinel One? SPY, cut in range, Q, cut in range, IWM, range bound, SMH. So again, you'll always notice, because I can see Mitch's screen when he's off screen, he can see mine. This is what we're doing when you're not seeing one of the screens. We're just hammering through symbols just to get a good view of what's going on in the markets. We have semiconductors leading the charge. They really led yesterday too. Right? We talked about how the SPY closed with a red candle, still up on the day, but a little bit more flat. And we talked about how the Qs, again, all these things closed roughly flat. This name on the SMH actually closed pretty well. So gapped up pretty well and leading the charge today. If we look at this, we compare it to the Qs, right? The Qs were red on the day yesterday, still closed inside the prior day's range, and are a little bit struggling today. And semiconductors are doing well. Nvidia leading the charge a little bit, AMD doing okay, but a lot of that's going to be the Intel gap, right? So far, a gap and go in Intel, so no blue arrow to be seen here. So we're going to wait for one of those if we were to take a trade. I keep refreshing just to see if my account comes live. I shouldn't. I know I shouldn't. That if it comes live like now, right, by the time I set it up and everything, just no shot. Shouldn't be doing that. Should just take today. Take today as an observation day. SPY range bound here. Qs range bound, right? So everything's just stuck in a range. Not really much to do. IWM breaking out. That's actually really interesting to me. Duplicate that tab. Bring that over here so I get more screen real estate. I only have one screen. I know that's like really weird to some people, but it's a big one. But I only need the one. I got multiple tabs I can switch to and all that. Yeah, we are in a 3-point range, right? It feels like everyone's waiting for something, but there's nothing to wait for, guys. The market is open. There's no more reports to come out. It's time to get going. I have not checked on Bitcoin this morning. It's not doing anything either. Okay. So this makes me, every time I see this, I always look to the next day. So there's nothing for, oh yeah, so consumer sentiment on Friday. Could be why, right? Sometimes you get these range bound days. Could be a range bound day, but let's see. Starting to make a little bit of a pop here. See if we'll get through this high first at 598.90, and then see if we get through 599.50, and then above that 560.75. So those are the three areas to the upside I'm watching, and to the downside, it's really just this pre-market low, and then below that we've got yesterday's low and the day before. So, we talked about this before. How I've got some trader buds who they're system traders. I know a lot of systems trader because I am as well, but they'll look at this action and they'll just shut off the bots for the day. Just go, no, nothing's happening. We'll see what's happening. And then yes, we do have the Fed next week. That'd be a big one. And consumer sentiment number, I think, will be interesting as well. Where, uh, that's a big report, right? That's a big report right now. Let's say because everyone's trying to figure out what's going on when it comes to the consumer. How they feeling? How's everyone doing? What are the vibes? Because the market's been crazy, and I think a lot of us as traders we're so focused on the market that we think that is what most people feel like. You ask 90% of the people on the street, they don't know the market's down 10%. Right? They're not feeling it. It's just us. We're in our little trader bubble. One screen, no way. Yep, just one. I think it's a 37, I think 32, 37-inch monitor. That's it. I got it split up into four corners. I've got myself over here. I've got charts, and charts. That's it. And then with Mac OS, right, you've got those virtual monitors. I don't know if that does anything to stream when I do that, but if I go over the other virtual monitor, I got a whole bunch of charts there. Another, so I do a lot on one screen. I just found multiple screens make things worse. So there's Path. This is the one that I was actually really going to be really excited about. So let's just mark up the trade and see what would happen while Trade the Pool sees if I'm a real human or not. So low of the day. Oh, this is opposite. So red's good, green's bad. Let's do that. Let's do a long position. Right, so there's our entry. There's our stop loss. And there's the profit target. Right? That's the kind of trade that we're looking for here. Just a nice little scalp. And again, if we can keep a 50-ish plus % win rate, that's great. Again, the ultimate target on these things would be, I'm just going to draw it in because Claude took something away from me, would be the 2-day view app. So as I get more comfortable on holding to longer, that's now we're talking a 4.5 risk reward. So, you know, right, I'll slowly get there. I'll go from 1 to maybe 1.5, see how that affects returns, then to 2, so on and so forth. But right now we're just targeting a little bit of a flush through high days on that. CRVO would be continue to move down. So now that we're just doing this, we can just want to demonstrate. I won't do this every day but we're kind of celebrating today. So like that was the entry, that was the stop loss. So if it gets there, that's the profit target. And that's it. If I can hit both those, great. Jets. Mitch is saying airlines are dumping. Jets is down a little bit inside yesterday's range. Let's look at DAL, UAL. Yeah, UAL is closer to the lows there. I keep thinking S is Spirit Airlines, but I think that was a long time ago. Spirit Aerosystems, this one. SPR. And speaking of, we just saw S on. Yeah, so there's something going on there. I bet you. Hold on, let me see. Yeah, that's what's going on. All right, Claude, we're in a fight. I got to make notes. Dear Claude, you're not including PM data in your VWAP calculation. Fast forward 3 years ago and say I'm writing notes to talk to my AI later, you'd think I was insane. So what's happening, why I'm getting these alerts, is because that it's using today's VWAP. It's not using VWAP with regular trading hours. That's the difference. So good. I've been trying to figure that out for a couple days. So I'll get that sorted. I think pre-market data with the VWAP is very, very important because a lot more action is happening in the pre-market. Adobe continuing to dump. Spies, again, rejecting that level, but still stuck in this range. Q stuck in the range. IWM, relatively strong, which is not something you say much about IWM and stuck in the range. So INTC is something we're definitely going to watch. So there's path. So that would have hit target. You'd be out of that. Again, as the account size grows, it will probably end up being take half off at 1-to-1. And then, because then if it comes out and stops the rest, it's break even trade. And then hold the rest of it until the end of the day or a 2-day VWAP hit. That's probably going to be how things go. CRVO would have been up a bit. Again, I'd probably pop my stop like down there now. So now I'm risking like next to nothing on the trade. And then we have an alert just came through. What I miss? AEO. So AEO, yeah, pulled back. American Airlines held the VWAP and then bounced right through. Again, the reason that I'm getting these alerts wrong is because if I take off pre-market, it broke through the VWAP and closed under it, and then it closed back through. So that's why it happened. The trigger happened right there. So I'll get that fixed for tomorrow. And again, this is the beauty of AI, right? I will grab this Pine script that I've been working on to build this. I will paste it into Claude and I will write that note. I'll say, you're not including pre-market data in your AVWAP calculation. Please fix. And also, you took away my two-day VWAP from the indicator. Give it back. I'll just write that and I'll just hit send. And then out the other end in a couple seconds will come, hopefully, corrected logic. So when I'm here yesterday, it's done. So my work to fix this script will be 10 minutes, right? I'll tell it what's going on. I'll tell it to fix it. I'll check that it's fixed. I'll do a little bit of spot checking, right? Just what a world. As opposed to something that would probably take me 2 or 3 hours to go through and to see how it calculated VWAP, to change the calculation of VWAP, to make sure it includes this data, to right. Just I'm just so excited. Real cool conversation we had yesterday with our guest talking about that. So the SPY, right, came down here to test these lows, Put that right there. So far, it's bouncing. That's a significant point as well. A lot of things just making it look that we are very range bound. Put a question in our WhatsApp there, Mitch, if you're still there. Um, yeah, so Jets definitely relatively weak. Right in the middle of the range here, definitely relatively weak. There's Boeing. Boeing's actually doing okay. So yeah, we're bleeding a bit here, guys. We still have a lot of room to go, but we are bleeding a bit. So this is the time where shorts I would pay more attention to. Again, this long I'm just out of. I would be out of. Um, and then this Intel, I'm definitely watching. You see no close under the VWAP yet. That's what we need to see is a close below a VWAP. I'm very tempted just to open up like my real brokerage account and just take a couple shots here, but that's not the plan. It's not the plan, not the rules. So we are at this little, not pre-market low, but it was an area that buyers came in the pre-market, and we are below that zone at least for now. If we can hold and start to push higher, then great. That's just a little bit of a flush, right? The real flush, I think, and rebound would be this low right here. But they probably did grab a little bit of kind of retail liquidity. So yeah, nothing yet. So that's the difference. At least I know the difference between the alerts that are happening and the alerts that I will be getting when they're fixed. It's why too. Again, a lot of people I think have a vision of a systems trader. Just I built a system. I'm walking away. Even if this is fully automated, you guys will see me here. Making sure everything's happening the way it should. The trades are being entered properly, and then B, coming up with a new idea. Right? And one of those, I think, is going to be just marking out these zones in the pre-market and looking for some sort of creating a strategy, which I can, and looking for them to cross up, right? You can just right click on these lines and say alert, but I only want to alert if it's crossing up over this line. And I'll do it once per bar close, and then I'll hit OK. So now what will happen is it needs to have a close under the bar, and then it needs to cross back through it. And if it crosses back through it, then it will alert me. And again, those alerts eventually will be able to be sent as fully automated trades with stop losses, profit targets, all that. Again, not for everyone. Some people want to do the hard work of doing every aspect of trading. Me, not so much. The way I look at it is say, what am I going to be good at? For me, I think I'm pretty good at coming up with new ideas to objectively looking at and figuring out the market. I am not good at the emotional side of trading, which comes from entering trades, taking the stop loss, doing all this stuff. So I want to systematize that. I want a robot to do that for me. It's kind of like if I was very successful, I would just have a trader do it for me. I'd say, this is what you're looking for. Here's the symbols to look at. Go have a good day. Tell me how you did at the end of the day. That's kind of what systematic trading is more and more. It's like having an assistant that actually does the trades for you while you just come up with the grand ideas. I like Apple at 10. If it gets to 10, buy it. Put a stop loss, blah, blah. I'm not going to watch it. Have fun. So we are under that zone, but none of this feels like doesn't feel like the selling. Oh, that was something. But it doesn't feel like the selling we've had over the last couple days. It doesn't feel this feels orderly. And again, I just talked about how systematic I am about everything. I'm talking about the vibes of the sell-off. But yeah, this feels very orderly. It feels very no one's kind of panicking or it's not running for the door. And I guess you could kind of talk about that with the momentum of the move down, or you could quantify that with the volume spikes on the move down. but this seems kind of orderly. So a trade I may take in my own account, because I do a futures trade every now and then, would be if, again, we reclaim this level. I may take a shot there with the low at lows, right? I don't really scalp in that account. It's more of just, you know, again, the vibes of, let me take those and see what happens. There's a chance that we just end up breaking it entirely, right? So we need to kind of keep that in mind. Ooh, a lot of alerts there. So that's probably our Intel trigger. No, not yet. Just, yeah, flirting with VWAP. That's not really what I want to see, right? Because I'm looking for people trapped on the other side of VWAP, right? And that doesn't feel like people are trapped just yet. So that's why you need kind of a solid close. And again, when it comes to building rules, you have to just create the rules, right? Build the rules and go from there. The rules will never be perfect, but nothing in trading is ever perfect. So yeah, so a minute and 10 left in this candle. That's why I like this handy countdown that you can see. You can do this in Trader Evolution as well, where you get a little handy countdown on the candle close, because that would be the trade. So we'll mark that up if that happens. SPY now under pre-market lows, post-market lows, and now we have to push this line down here and start focusing on yesterday's low. If we hold that, there is a lot of support in this zone. You can see below yesterday's low, we have this Friday's low, or we could call it, the crash level lows. We end up getting through there. That ends up being the really problematic area. So we'll see. Right? So I'm actually going to take this and I'm going to pull that down because that's got the alert on it. Push that. So again, there's just an alert there that says if you close below this level and then get back through this level, I'm interested in taking a shot. That's kind of what we're looking at here. But kind of giving me vibes of yesterday. If we go back to yesterday, it was the same thing. Sell, sell, sell all the way to like 11. And then buyers came in, the old plunge protection team. Give me that same kind of feel anyway, that maybe we're going to get the same idea where we have a bit of a flush off the open, and then some buyers come in. But again, from the daily chart, or let's just go to a 30-minute chart, right? I'm obviously watching yesterday's low and I'm watching the day before that's low. Those areas are going to be very, very important to hold on a closing basis. If we start threatening the all-time crash low, I think there's a lot of stop losses that are going to trigger. There's probably a lot of people like me who bought a lot of stocks 2 days ago, kind of in this zone. I bought a lot of names and I'm about break even. Some of them I'm up on. FLGT, at least I was up this morning when I checked. Yeah, so I'm up on that name. Some of these financials, even though the market's doing well, I'm not doing well on. But again, it's the first 30 minutes of the day, not even. So we have to see what's happening there. So far, pre-market low, it was one of those flush and bounces. So if we end up getting that, that might be an interesting trade. And again, I want to watch these because I may open up another account and uh, just have those. Well, one of the beauties of the web version, you can have different accounts on different tabs. So you can just have, like I do here, you hold control on a Mac and then 1, 2, 3 switches between different tabs. I can do the same thing on the web browser where I could have different accounts and I could just pop between the two of them based off kind of whatever's happening in. If it's a futures trade, pop over, take the futures trade. If it's a, and by futures, I mean I would probably load up. I'd have a watch list of TQQQ, uh, S S X X X Y X L, whatever the triple leverage spy, right? Find a triple leverage Q, triple leverage spy, triple leveraged. Semiconductors, which is SOXL, right? Have some of these names, Bitcoin, just have a list of these names ready to go, and then just again trade the ETFs based off what's happening there. Just have that happen in a completely different kind of account. Okay, so just got word no interview today. So I know we talked about Triple D coming on soon. Got to get Mitch's internet back. Those guys are good buds. If you didn't pay attention, they were doing a morning show way back in the day, right? I'm gonna say way back in the day is what, probably even 4 or 5 years ago now. Man, I am old. Uh, yeah, so it'll be cool to see those guys reunite. Triple D is an interview you guys got to show up for. He's kind of a personal hero when it comes to systematic trading. Right? It's he's had systems, he's been running them for millennia. It seems like one of the most consistent traders that I've ever seen, right? Not the guy who's going to boast about 100% gains, but I'm making 2-3% a month every month, and that's how you have an insane equity curve, right? If you're making 2-3% a month on your account, you become a multimillionaire in short order. That's why the people who say I'm making 100% or 200% a year, it's like just put that into Excel and start with 10 grand and do 100% a year, and you become like a quadrillionaire. You own the entire world incredibly quickly. So if you're making 30% a year, and let's say you're withdrawing half of that for living expenses, you're still doing amazing. So AEO looks interesting. Even if Intel triggered here, I don't think I would take it. And this is where kind of discretionary stuff comes in. And this is something else that you can do as a systems trader. If I think I'm probably going to convert some people here. So one of the things you can do as a systems trader, if you want to have discretion in the market, is you can either flatten trades when they come into your system, or you can just avoid them entirely, right? So the system, when we get it working, is going to run off my list. So I could just delete Intel from the list and say, I don't want to trade this one to the short side. And the reason for that is because you see it hasn't come down at all when the market has been just selling. That is insane relative strength to me. That to me means if I was to bet on a bounce in the market, I would probably want to buy Intel, if anything, because it's come down, it's held this VWAP. Look at all the bottoming tails around this VWAP. If the SPY, which is trying to dig in here at the pre-market low, if it does dig in, I think this would be an amazing place to potentially look for a little buy. Your stop loss is just right here, and then you're targeting the high day. So let's draw these out. Let's draw out a long position, right? So this would be my idea with Intel, right? Simple 1-to-1, because we are getting a lift here in the SPY. So it is lifting off that zone. Could just been another flush and shake. This is why, again, as a swing trader, um, I don't watch the open, which really was one of the things. It's why I reached out to Michael, the CEO here, when I left with Trade Ideas and said, hey, Mitch, need a little help on that morning show because I want to get into day. I was kind of just ignoring the opening entirely and doing other things, emails and silly work like that. But I'm like, I think I'm missing out on something. And it's not swing trading. I definitely shouldn't be swing trading off the open. But is there a place potentially to add a little bit of income to what I'm doing from a trading point of view by taking one of these accounts? I got the small one, but you better believe if you're watching, Michael, I'm coming for you. And I'm saying, all right, give me the big swing trade one. Let's do the big one. Come on, give me more buying power because you get a $260,000 account. These 1-to-1 trades, instead of being $25 a trade, which is what I'm planning for in the small account, are $250 a trade, and you're on average netting that a day. Well, now you're talking like a 60-70 grand a year side income that as soon as the stream shuts down, I'm done. I go walk the dogs, I do other things, and then I come back and I focus on the swing trading side of things. So there's going to be times I know where the day trading side of things is hard, but the swing trading side of things in those markets probably easy because the markets aren't very volatile, and then vice versa. Times where my swing trading is not doing well. Well, thankfully, I built a couple strategies from the day trading side of things that make money, and I'm not using my buying power. So it's not like I have to decide which ones to trade. I can trade both because it's Michael's money. It's not my money. So that's the beauty of all this stuff, right? Is free buying power for different strategies, right? You don't treat it like it's a game because it's someone's money. It's not your money, but someone's money. But you're just little, right? There was a survey done that most self-made millionaires have like 6, 7 different income sources. So that's just trying to pop new income sources on there, right? And it also means, again, if you lose one income source, if day trading just ends up not doing anything for a month or two, it's okay, right? Yeah, we talk about the mental side of the game all the time, and that's a big one. Oh, there's Adobe. Is that getting close? Yeah, so this is one that I'd be really interested in. So let's mark this one up as well. Um, we're gonna mark it up. There's that candle. So there's low. There's the high. Pretty much day's low, day high. I just like this one because look how long this is spent under VWAP. Pretty much the entire day under VWAP. And then, yeah, it gets right back through there. Probably should have waited for a little bit of confirmation just to see. But the idea is, hey, if I was short this thing, this is how you have to look at this trade. So this is why I'm looking at these fades the way I am. If I was short this name and I was short it from yesterday, I took a bet short on earnings. And it's just spending the whole time here under VWAP. I'm going to keep holding my short, hold my short, hold my short. Gets above VWAP, starts to close above VWAP. All right, let's take my profits and move on. That's all I'm looking for, right? Adobe can then roll over and go right back to the depths of which it came. I'm just saying, just give me a little pop. Give me a little pop where you get some buyers looking to get in. You get some shorts looking to maybe take some profits. Give me my little pop and I'm out. So yeah, Intel, that would be the kind of theoretical Intel trade. This would be the theoretical Adobe trade. Again, theoretical for those who are joining. I passed yesterday the funded account for evaluation. I've been, again, at this for a couple months, trying to build a strategy that I can do pretty consistently. Figured out one with you guys live, implemented it, was able to get a little bit lucky on some holds just because the market really ripped, and I was able to just say, hey, let's go for the uh, let's swing for the fences on this one. So I got that account funded. So now it's KYC, and I guess they're going to send me an email and all that kind of stuff, right? Again, I said it in the pre-market. If you're dealing with someone who's not doing KYC, worry, worry a lot because it means they're not doing anything legitimate, right? So the fact that they have to, I'll probably have to give them my driver's license or passport or something like that. That actually should make you feel better about the company, and certainly not worse, because it was just like, here's your $250,000 account. Have fun. We don't need to know who you are. I'm like, oh, what's going on there? What's going on there, guy? And when does the government come knocking at your door? That's the real question if they're not doing KYC. So SPY, again, we bounced. It's wild how this works. We bounced right to VWAP. Also, this swing low in the pre-market, and we struggled. We struggled there just a little bit. So now we need to see, do we dig in? This, if a sell happens and it comes down to this zone, do we dig in and start to push higher? If that's the case, then that was just a little dip and rip for the day. And time to start going to the long side. If it was anything less than that, we end up taking out that low. That could be pretty bad. But if this was just a massive undercut and rip for the day, then that's from a longer term chart really, really bullish. So we've got our theoretical Intel trade going on here. CRVO, that would have just been a break even. So I'd be out of that one. It came so close to. This is why I've been like a little bit close on it. Right, again, I mentioned my stop would just be right above VWAP here. So pretty much break even, a little bit nothing right there. And yeah, so this would just a discretionary play long. And again, the idea was the whole market was selling. Intel was pulling back a bit, but it was holding that VWAP really, really well. So that's why I said, these are where the discretion of the systems will still come in. is that I wouldn't have taken that short. If I saw that short come into my blotter, because it's automated, because hopefully, CEO, if you're watching, we get automated soon. We can automate these things. That'd be amazing. But I would just probably cover that for a flat. Just go, no, no, right? You can overwrite. There's nothing wrong with having a bot assist you and then overwriting that bot and just saying, no, man, just because it came down, held VWAP really strong. Again, never triggered. I'm just saying theoretically, if it did, but that's why we were interested in we're doing this kind of simulate along, because it wasn't its relative strength. Whole market was selling. This thing wasn't. So that's interesting as well, which again, another idea for another system. This is something that me and Mitch could look at as well, is why don't we just, after the first half hour of the day, look at what the market's doing, scan for relative strength and relative weakness across big cap names. And so what was strong today? Intel was really strong. Nvidia was not. So Nvidia didn't come with it. Adobe, right? Relative weakness. I'm going to take this because it's right. I would have taken this because this is the setup. But Adobe, relative weakness. We just go through and we start looking at where's the relative strength, where's the relative weakness. Then you got to kind of predict what you think is going to happen next in the SPY. I think, right? We dipped off the open. That was bought up pretty hard. If I were to take a bet, I don't have to, but if I were to take a bet, I'd say that low probably holds, at least for the next hour or so that I'm on here. Who knows what happens on the close, but at least for the next hour, that low holds. So then what we're doing is we're buying relatively strong names if we think all of those things are true. Right? On pullbacks, we're saying, okay, we identified that Intel is relatively strong, Nvidia is relatively weak, Adobe relatively weak. So if we thought the market was going to roll over here and go to new lows, then we would short the relatively weak ones. We'd be shorting Nvidia and we'd be shorting Adobe, and we would just be leaving Intel alone. I guarantee you this is a lot of how different funds work. Relative strength and relative weakness is the easiest thing in the game, just because you got to understand the SPY is just a basket of stocks. It's not a thing that's traded on its own. What happens is all of these stocks are moving and the SPY has to kind of rebalance across this thing. So, right, it's not something that is traded. It is traded on its own, but it's traded only because these other names are moving. Right? There's no way that Nvidia goes bankrupt and the SPY comes up, right? You just think about it in the extremes, right? So now we're through VWAP pretty handily. A lot of these longs are just going to come and work out just by the sake of it. But man, what a push there in the SPY. So it was a dip and rip, and we've seen that. And again, this is every time I see this, I know people are after me for being so bullish as long as I have. This is institutional, right? It's not retail that waits for the market to dip and loads in long. This is how institutions get involved. They look for big areas of support. They look for those flushes. They have to buy on the way down. They have to. So the easiest way to find if an institution's getting involved in something that you're trading is these V reversals, right? It's because if I am Warren Buffett and I want to buy a whole bunch of the SPY because I think we're overdone here, I'm not buying it I'm not chasing it to new highs because I'll get killed and I'll pay up way too much. I'm waiting for those rips to occur. So now we actually got a trigger there on the SPY. You see that little green arrow just kind of appeared right in your face. So this would be the times where names like TQQQ, not there yet. What, SPXL, is that it? If I had, maybe this is something we do. Maybe I open up I'll have my real account, maybe. Hopefully by next week. It's Thursday today. I keep forgetting. Hopefully by next week, I'll have my real account. And then, which I don't think I would trade tomorrow anyway. I think I'm just going to celebrate the win into the weekend. So, but yeah, SPXL would be, again, let's mark it up. Let's pretend these are live, right? Live right here, out right here. So you can see this is the first stage of paper trading. And then at the end of the day, I'll go through all these. So path would have been a full win. CRVO, I'd have to go remember all the ones that I did. CRVO, either a flat or a win. We took Adobe underwater on that right now. Intel about a flat. So I would just track these out, SPXL. Right? 1 day's data is obviously not enough data, but so far I'm sitting on a bunch of flats and a couple solid winners. So, risking $25 a trade, which is what I'm going to do when the live account comes. That's not much, but as I build a cushion, that will obviously grow. And if I pass the big guy, you're talking $250 a trade. So, you're up 500, 750, $1,000 today. It's 45 minutes into the open and you shut them down. You say that's enough. Then you get yourself a big swing trading account and then you come back in the afternoon and you say, okay, well, what's the where's the market closing and what potentially could I buy? So I mentioned again for days that I bought a lot of stuff on this day right here. I bought a lot of stuff. So I want to see a couple days of a bounce. I very much so I'm biased there. So I'm definitely fighting my bias, but I want to see a solid little bounce. Because that feeds the kids. But yeah, now so we're above this pre-market low. We rallied through that high. And if we look at the SPXL, that's the trade we got on the go. ADBE. That's still chopping around. Intel still chopping around. And CRVO. That would have eventually hit target, right? With the lowered stop loss. So 2 targets and then a bunch of stuff just messing around. So let's see here. The relative underperformance of the Qs is kind of concerning to me, right? If we look at the SPY, we're almost back near high of the day. Look at the Qs, we're a little bit weaker. We just kind of switch between those. SPY, QQ, right? You can see a little bit weaker, moving together, but a little bit weaker on the Qs. So just showing that tech isn't really the thing right now. So maybe other things are moving. Let's go to the heat map here. So I just kind of said, I don't want to see anything. Let's get rid of anything up or down 1%. Let's just look at the big ones. Ooh. Palantir, Adobe. Yikes, yikes, yikes. Communications doing well. Communication been doing for a while. And then we have healthcare up quite a bit. Finance, Robinhood's down, but the rest of these are up. Communications, what is this? Non-energy materials, FCX, NEM. So gold, silver, that kind of thing is doing well. So Adobe trying again here. What else did we get? Here's all the alerts. AEO. That's kind of interesting, right? Push down and then a pop. Is AEO going to be the other ANF? That trend was just wild. Get rid of that alert. Right. So that's the process. That's the process as I'm doing it. I've got this strategy. Just going to continue to scalp away with this strategy, small enough that I never have to go through the process, hopefully, of getting a new account ever again. That was not fun. But at least I have a system that I can do it now, right? Now it's just fully automated and fully. You can see the amount of time and brain power it's taking even now to trade this system, which isn't very much. The risk is calculated right here. So if I was risking $25, I'd take 5 whole shares of this Adobe, but it's a $400 stock, right? The risk would have been calculated here on path. It would have been way lower here, but right, 70 shares. So I've got that just on every chart. SPY taking another push here. So they ain't letting you in if you wanted to get in. They ain't letting you in. Nice push there. So we're getting this again. This is the 2-day VWAP up here, and we saw this yesterday from the downside as the market sold, settled in at that 2-day VWAP, and then looked good. The long side of things could do the opposite. So, right, I think it was this zone right here where we struggled on that 2-day VWAP for a while. Could do the same thing here. Could pop up. We could go through that 2-day VWAP there as well. chugging energy drinks because I have a baby and those things don't like to sleep. So, yeah, that's the next area to watch. If we break this high, I'm going to be watching that 2-day VWAP really, really closely. This is what we talked about yesterday. These are my real charts. These are my closeted um, unicolor bar chart guy. But these are the things I look at for you guys who are everyone's used to the candlesticks, even though the bar charts give you the exact same data, high, low, open, close. I like these. Where is it? This one. I like these ones so much better. They're just so much more calming, I guess. But when it comes time to take a screenshot or share anything, I always show these guys. Just screaming there, just screaming higher. And this doesn't feel like news. Like it's not like a big pop, and then now we're dealing with just candle after candle after candle, higher, higher, higher. Just to show, right? Yeah, we are. They're not letting you in, right? So we had those bips. That feels like a buy program. Every time there's a dip, this buying's coming. Every time there's a dip, there's some institution that's saying, okay. And if you just look at the daily chart, it makes sense. I mean, again, there's not a lot of people think of, HFTs and algos like it's a bunch of scary dudes in a room making decisions, but it's not. It's just there's a couple funds here that run either quant models or even the macro guys, and they say, okay, market's down 10%. Is it time to start buying? Is it, now we know all the tariff thing and we know all this and everyone's expecting what the Fed's going to do and blah, 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 right? That's all priced into the market. And they're saying, yeah, I think down 10% is good. You know, basically, I'm going to make the bet that we're not down for 10% at the end of the year. We're down less than 10% at the end of the year. So what you see is 1, 2, 3, and so far 4 or bottoming tails. And this is where, again, as the guy who wants to, I want to be known as the guy who demystifies all this stuff and makes things really, really bone simple. These bottoming tails just mean that we had a sell off, and at some point later in the day, buyers came in. That's it. That's all she meant. So if we're seeing that pattern over and over again, it means that there's at some point during the day where can't just be one person can't move, a $20 trillion market. It has to be a bunch of institutions, probably independently came down to some sort of research and said, yeah, I think down 10%. That's good. I think we're going to be down less than 10% by the end of the year. So as the market comes down, they buy stocks. They don't do it all in one shot. They hit a button that turns on a buy algorithm, like I talk about all the time, that spits orders into the market randomly, like actually randomly. Like I saw a couple of the codes behind these when I worked at hedge funds. They use a random number generator. So, right, time between next trade, random. Size of next trade, random. Like with the goal of by the end of the day or the end of the week or whatever, or until I turn off the button, right? I want it to be as random as possible. And again, the reason they do that is because everybody is hiding their orders. It's all a game of can I hide my presence? Because there were people like me back in the day before this stuff was done like this that watched the tape, every single trade on the tape, and we could start to see, oh, every time this stock gets to $10, Goldman Sachs comes along and buys. That's interesting. And then you just start buying with Goldman Sachs. But what they did is they just started by differentiating. I like the stock at $10. I'm not just going to put a big order at $10. It's barbaric. It's dumb. It's the easiest thing in the world for someone nowadays with quantitative systems to build something around. Give me a day with Claude, and I could build something that looks for large bids and large offers and takes the other side against them. Okay, so we just won't do that, right? If everyone in the world is onto us, we just don't do that. We'll create a system around $10 that will basically say maybe under 10 all the way to 950 randomly and periodically spit out orders. Put them out in the bid sometimes, take the offer sometimes, right? Who cares? I'm not paying commissions. Right? If you're a registered broker dealer, you don't have to pay commissions. You can just sell your order flow, right? So I'm going to randomly spread out these orders, and I'm going to do it in a way that is as complicated as possible for the rest of the world to pick up on. And That's how I'm going to get my clients in and out. And that was done like 10 years ago. That was done and dusted. So ever since then, they've just gotten way more complicated. Uh, right. Which is again why if you want to, for the people who really want mega precision, they're going to fail because the market's not done with mega precision. It's done in areas, it's done in zones, right? The So this is the 2-day view app we were talking about. We have just been screaming, right? And again, this is the kind of buy program stuff that I was talking about. We pull back a little bit, buy it up. Pull back a little bit, buy it up. So now we're getting to this 2-day view app. The question is, at what point, you'll never know, do they say that's enough? I bought it, I bought everything I wanted. No way. You'll never unless you got a little drone inside all the big institutions out there, which there's thousands of, you don't know. Now, this 2-day view app, if I was running a sell algorithm, this would be the area that I would start to activate it. So if we get here install, that makes sense. Right? Could also be some of the people buying it here are putting out profit targets there. So that could cause an incremental stall. So again, you'll start to see it where, okay, if the person wanted to buy, we talked about it on the daily chart, in this zone where these bottoming tails live, as you leave that zone, it doesn't have to be that there's a large amount of sellers. It could just be the guy turns off. I'm no longer interested in buying here. So it'll just turn off, right? Uh, so it could just say, okay, we're getting a little bit done. I'm just going to turn that off for now. So we've gotten pretty much to the 2-day view app exactly, and then we have faded from that for now. So now it's one of those, right? Hands off. What's gonna happen next? So if we pull back, come into view app, and then bounce, that's great. But until that, we got what my buddy Brian Shannon calls an A view app pinch, where we have a view app above us and one below us. We have what could turn into, we don't have the evidence for that yet, but just competing buy systems. And then we're just looking to see what happens with those kind of competing buy systems. Oh no, I'm out of energy drinks. Oh no. Yeah, so we're chilling at that zone. Now let's go check up on our hypothetical trades uh here and see how they would have done. So now is kind of the point, right? You're an hour into the market, and now is kind of the point where I'm like, okay, this is where, for me personally, again, building this trading plan. I shared the trading plan with you guys, the whole document. Um, the idea is I want to start kind of winding it down, right? And now is where we kind of do like a bit of a post mortem on the market too. Uh, but Intel, boom, would have come right, right. It's like one of those. This is the problem with paper trading. Do I give myself that? Right? Look at the. Oh no, it bled through on candle, so I would have gotten filled there. So that's uh, 2 trades with no losers, right? So that's winner. That's a winner. That's a winner. Or I could have seen myself chickening out on this one. So I'd take that as a flat. And there's a loser, right? So for 1-to-1, 2 winners and a loser, that ends up being just a positive 1 day or whatever you could say. So now Adobe ends up being a target for later in the day, right? Same kind of thing with iRobot yesterday. So again, this is the benefit of systematization. So I've got that alert now. I got that alert hanging out right here on Adobe. So if it triggers, I'm just going to get an alert from my watch and say, okay, take that trade. So same with if the market reverses, maybe Intel's a shot for later in the day. But I don't need to sit here and watch it anymore, right? Trade the Pool's got an app, and TradingView as an app. So what I'll do is anything that's a target for later in the day, I'll just leave on here. So Spirit or Sentinel one is not, because that's up huge unless you wanted to take a reversal back down through view up, but that's up huge. That's gone. So it's like Adobe, and there's one more. Oh, Intel. So like Adobe and Intel. So what I'll do, see, right? You clear everything out from this list except Adobe and Intel. So now I will only get alerts on Adobe and Intel, and only when there's a green arrow or a blue arrow. And I'm free. I can go about my day. I can keep my, keep my watch on me. If I get an alert that comes through and I'm somewhere that I can either take a look at it, because I'm not done working for the day. I do other stuff, right? So I have my laptop in front of me. I'll have a tab open that will have, again, not today, but on most days, have the Trader Evolution program, the web version, open. So if I get the alert, I'll switch over there and look at it, take a shot if I want to take a shot. I know the position size, so 30, 35, or 36 shares on this, and say 5 on Adobe for that $25 risk. You move on with your day. Again, I have a whole video on this too. I think that, like, if you wanted to say, I want to get into systematic trading, but I'm not a quant, and I can't program things, and these AIs scare me, so I'm not going to let them do it for me. Step one is just to utilize alerts. If you're someone who likes MACD crosses, you can just go find the MACD, and then you can set alerts on it, right? Tell me on Intel when the MACD crosses. I screwed that up. MACD. Right, you go to this little 3-dot menu right here. You click on that. You say alert for MACD, and you could say crossing. Right? You can say rising or falling. Right, when it crosses the 0 line, for example. There's all kinds of alerts that you can end up going through. And that's like step one on systematic trading. To be a systematic trader, step one is just set alerts, turn off some of your screens, or put something else on them. Like bigger charts. How about that? Instead of having a million small charts, I've seen the people who've got 6 monitors and they've got these little tiny charts on each one. I'm like, how are you living your life there looking at those little tiny charts? So yeah, it's one of those things. Set alerts. That's step one. If you want to be systematic, just wait for your alerts to happen. Right? Step two, you get a little bit more fancy with it. But I've got a special guest for you. I see just pop in.
Alerts, alert, 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 alert.
What's going on, buddy? You're back.
Spectrum
Are you on a big hot fought, or did
they tried to shut me down, and this is usually when the market goes up. So I'll just say that. When I miss the market,
should have been my buy. Yeah, that should have been my buy signal right there. I should have said, "Oh, Mitch is
you have
busy."
No idea. I was there, and I'm just like, yeah, today's gonna be the day where the trade just works. It goes.
Yeah. You wait for the undercuts pre-market lows, and just boom.
You guys don't remember? I mean, I missed like 2 days because I went to Disney and something, and then the market just started to tank. I was like, oh, now you want to play the VIX. Now.
Yeah.
That's how it goes a lot of the times, guys. So it's good to be back at least. Looks like my modem gave out on me. So, hey, at least they fixed it and back up and running. Definitely not going to be trading the funded account today, because that's just a recipe for disaster. That's like if Michael just got his account right now, and he would be like, oh yeah, I'm just going to go and make a trade now. That's when you get wrecked, right? You probably like 3 or 4 trades would have worked for you, and then you try this one and it's just like disaster.
Well, and you'd be scrambling to sign in. Yeah, there's a lot about routine, right? I get up,
exactly.
I drop the kid off school, I go to the gym, I sit down, I make my list, I've got my routine. And that routine is, I think, is not just for trading, but for life. I think these routines like that are huge.
Yeah. I mean, I always talk about this one thing that I will say, there's not, I don't believe everything like, let's say, Tony Robbins does, or Gary Vee, or all the kind of, let's say, influencers in the motivational space. But one thing I definitely do believe is having the ability to do one thing that's important. Every single morning, you must do what's called priming yourself. So getting yourself ready for the day. What does that involve, right? And what does that take, right?
Everyone, yeah.
All things that are very important, because if you're not in prime mode, especially for trading that starts early, fast, and causes a lot of actions in your mind to kind of go through processes, right? Well, you need to be ready. And that's why you see certain people wake up at 4 or 5 a.m. because by the time they get to the open, they've been up for 4 or 5 hours, right? Versus the trader that's been up for 30 minutes and expects to be sharp. Just doesn't work, guys. So I always say priming yourself is one thing I learned from Tony Robbins. He does this a lot with high executives in CEO space, right? Like if you're a CEO, you can't come in one day and be off your game. Like you can't come in one day and just be upset with the world. No, you have to have that right mentality. You have to influence. You have to have the right mindset. And a lot of that is priming yourself in the morning so that by the time you get to something, you're ready to go.
Yeah, and I think it's one of those that kind of routine might be incredibly different for everyone, but it's super important to find out. Again,
Yeah.
for me, up, spend a little time with the kids. I don't look at emails. I don't check the company WhatsApp. I'm just kind of completely, let's hear, let's do family stuff. I go to the gym. The way I always look at it is I want to get all the human stuff out of the way before I get all the business stuff done. So whatever that human stuff is for you. For me, gym, a little bit of meditation, play with the kids, have a good time, and then off to work. But for other people, again, I don't envy the people I envy that they're off at like 3, but the people in California that the market opens at like 6:30 for you, that'd be a little rough. But you still got to get up. Even if it's just get up, you have a coffee, you read a little bit of a book, you do a journal, whatever it is, and then you go from there.
Yeah, just looking into the market right now. I'm trying to trade on the eValve, and one of the strategies, of course, is kind of those 30-minute bottomings. SPY seems to be stuck in this kind of bearish uh, pattern, I would say for sure. I felt like the bounce just kind of died out when we kind of did the overnight gap down, and so it kind of failed to trade there.
And look right
Um,
at the orange lines, the 2-day view app on the SPY. So we got
yeah,
right to
yeah,
there, and when I
just
was talking
failed.
about it with chat, I was saying this
560, man.
yeah, this was very buy program-esque, right? This
Hmm.
was some macro fund has decided 10% is down enough for the market, and they hit the buy button and big grind up here, and then kind of fade it, right? So,
Yeah.
right, I'm yelling at ChatGPT right now because I figured out a problem with my script, and I'm like, listen, and it took away my 2-day view app, and I'm gonna scold it. I'm gonna say,
Yeah.
listen, I didn't tell you to take away my 2-day view app. You add that back to my charts and fix this problem you made. It's just funny how I'm making notes now for a conversation with a robot I'm gonna have later. Just what a world.
Yeah, what a world we're in. And today, light number, yet no positive reaction off of it. We'll see what happens here. I'm willing to bet. I'm probably going to bet right now on the downside, at least just leaking through, because I don't see the positive catalyst right now to move us higher. We had those opportunities, the CPI, the PPI. It didn't do anything. So in my eyes, I think we're still just leaking. And a lot of this is just the AI trade giving up. Intel
It's,
giving up now. I think that's an important one too.
it's interesting you say that because I had a chat with a buddy of mine who's more macro focused dude than I am. Right, I'm a
Mhm.
quant, but and I asked him, I said, okay, well, what's going to be the thing to take us higher? And he made a interesting point that I'm going to mill over. He's like, I don't think it's anything at this point to take us higher. I think we just need nothing to take us lower. He's like, we're down 10%, and the market doesn't go down 10% very often, right? So we're
Mhm.
down what's considered a pretty big move for the market. He's like, I just think if there's nothing over the next week or so, that's enough that the market goes, okay, let's dig into the new normal of tariffs and all this stuff. But he's like, him talking to a bunch of economist friends, and he's more of an institutional guy. He's like, what we're just looking for is again, nothing to take us higher, but just stop, stop taking us lower.
Yeah,
If that
stop the
makes any
bleeding.
sense, right?
Stop the bleeding,
Just
right?
no more bad news. And he said, no more bad news. I think the market rallies maybe 4 or 5%, which still puts us in the low end of the range. And that's kind of what we're seeing here. We talked about, right, TNX, we talk about all the time, the treasury market, right? Nothing today, right? Which I think nothing is a good thing, because
Yeah.
again, it means nothing was scary that came out for another today. They didn't bet that they're going to raise rates. They didn't bet they're going to lower rates. None of that changed. It said, okay, this number came in fine, not enough that we think it's going to make any change. So, right, the SPY could be one of those. We don't need to take any change, right? But right, nice, this buy program that happened here. If we lose this low, I'm with you. I think all bets are off. But uh, again, it could be one of those do nothing, chill out for the rest of the day. We had the move, had a big flush down, and a massive rally up. It's definitely to the point where a lot of the day traders are like, all right, I'm good.
Yeah. That's when the usual trade has been working, though. That's one thing that I will say. The afternoon trade, you caught one on yesterday. I caught one in Soxal, and a lot of that was what? Just trying to use lows, right? And waiting for
Yep.
the afternoon kind of rally, right? And I think that's the important thing. Not making it difficult. That's how I made it on Soxal. I just said, well, I'll just risk 1 penny below the low and see what happens here, right? A simple trade. And I did it on the funded account. And that tells you more and more how I was just like, well, this is just simple, right? I'm just going to take it here and see if the algorithms turn on and it just starts to come back up. But one thing I've noticed also is the kind of the imbalances towards the close. They're using those to kind of get back into the short positions. I feel like there's some like intraday longs happening and then overnight swing down. That's what's concerning me. So are they selling the rip, right? And then in the morning, they sell it right back, right? So like that's what I think I've been noticing. Even Dennis Dick doing a lot of that action too. So maybe I blame him. But yeah, things like this, man. I've been seeing a lot of the swing traders. They're like, well, if we're down on the day, I'm buying it and selling it the next day. And if we're up on the day, I'm selling it and then just buying it back in the morning. And I'm seeing a lot of that action. That's when it can get tough, right? Because essentially you're just dealing with the volatility, right?
Yeah.
And that's where I think it's very important to start looking for smaller size for me and bigger wins, right? So smaller size, but separating it out. If I need to go 1 to 5, I'm okay with that. I feel like this is the time where a lot of traders struggle in their accuracy. And this is why my accuracy is and risk the reward is closer towards a 3 to 1 and 4 to 1, right? Because I know how it works, man. At the end of the day, for you to be, even like, let's say like your dashboard you showed earlier today, 80% accurate, right? If you can do that consistently, then yeah. But if you trade more and more, the odds are you not to stay that high on the accuracy.
No, I don't expect.
And that's when you got to size down a little bit, right? Size down a little bit so that it doesn't affect you trade to trade. And one thing that we always talk about, and I think that Trading in the Zone says this the best, right? Is that a lot of traders have a tendency of thinking in trades like, let's say, like 5 trades, right? Like 5 trades determines their mentality versus what the book tells you is at least do 50 trades. At least do a sample size of 50. And then you'll know a little bit more about your strategy. You'll know more about your data. Like how you started to adjust your system and saying, you know what, I'm just going to trade a lot more and smaller, right?
Yeah.
Because then at least you learn if the system's working or not, right?
Well, and it's right. I always say, just a simple mathematic is flip a coin 3 times and tell me, right, the odds of getting heads and tails. There's not enough. You can't. If you flip a coin 3 times, you will not get 50-50. If you actually go and look it up on how many coin flips you have to do to get, and you'll never get 50-50. You'll always get some, distribution around it. But it's 1,000. That's how many times you need to know. You know that a coin flip is 50-50 win rate. You have to do it 1,000 times so you get anywhere close to that number. And then, generally 10,000 times before you actually hit that number. So yeah, if you're doing a couple trades, and that was one of the things that really got me thinking of, okay, no, I should be taking, because I was looking for like 1 trade a day there. You can go through. The beauty of this is everything is documented, right? You can go through the channel. There was a while there where I was saying, okay, I'm 1 and done for the day. And I'm like, that doesn't make any sense, Mike. Like, that was more of a mentality thing to get me kind of feeling good. But yeah, tons of trades, just really small. That's why you see the risk I have adjusted here when I get my account is $25. I'll have to lose what, 10 over 10. So like 12 to 15 trades in a row to get 1 day's stop out when I get that account, right? And that's the game
Exactly.
plan,
Yeah.
right? Just tons and tons of trades. I hope I come in and I make like 20 trades a day. And then at the end of the day, I just because I simplified the process. The alert comes through, I hit the
Mhm.
button, I take the trade. It doesn't take a lot of mental capital at this point, and you take a lot of trades, you take them really, really small. If my win rate ends up being 55 to 60%, which is what I think it will be in the long run, I'll end up making money on a one-to-one. And then again, we'll talk about stretching it out to 1.5 or maybe 2. But uh, again, it's a math equation. And
Mhm.
the problem is, I think people, they do so much work. I was talking about this on a space with a couple of my buddies yesterday, the day before. I think there's a sunk cost fallacy in research that people don't look at too much. If you have read the news, you've done 20 minutes of analysis of what the news was and the chart and the blah, blah, blah. I think that kind of puts your mind frame in the fact that you think you kind of convince yourself into the fact that you know things. And I have done so much research that
Yeah.
and that research has concluded the stock is going to go up.
Mhm.
Therefore, I want to buy it. And I think that I am more accurate in that information than I actually am. Maybe I'm 60% sure that that stock's going to go up, but I'm going to treat that trade as if I'm 100% sure. And then when you're wrong, it hurts you mentally, it hurts your account. So again, that's why lower size but more means I don't have the time to get committed to any trade. Any one trade, $25, like not to brag, $25 isn't a big deal. So, if I do a lot of $25 trades, then any individual one trade, I don't care. Right. It's, I'm like, honey, don't go to Starbucks and get one coffee because that's what $25 gets you nowadays.
Yeah. Yeah. No. One thing that I've been seeing, and I saw this on, I'll give them a shout out. SMB Capital put out a video on this kind of strategy that we've been seeing a little bit and more the volatility. And they had something to do with also the liquidity thing that we've been seeing. I feel like that's the
Mhm.
interesting part about it. I always like to find traders that are talking about something similar than me and seeing something similar than me. Maybe we don't see it the same way, but if we're both seeing it, there's something there, right? And so they were talking a lot about bigger traders taking trades around these important levels right now where it's causing that washout liquidity move. And so
Mhm.
essentially what you need to be seeing and what they're looking for is for the moments like this where we're starting to see like bid action, right? And then what they're seeing is a lot of this kind of on the offer. It starts to push, and then it slows down there, almost like a pocket gets created. And I've been seeing that too, that pocket, right? Where it's like, even on the small caps, where it's like a perfect level for breakout. It even gets some volume down here. It breaks out, it goes right into that breakout level where, let's be honest, on usual markets, it's boom higher and it's going like one tick higher and getting a quick wash down. That's one thing that they're telling us that is something that's happening. And what are they pulling it to? Also, the heightened VIX. So they're saying that this
Mhm.
happens way more often when you have that VIX above, let's say, 25 or maybe 30, whatever you kind of calling that level, right? So in the heightened VIX environment, we're going to get more of these liquidity pulls where it goes to a level, liquidity comes in, like kind of that wash, and what you're essentially seeing is the bigger traders making money on the smaller traders. And that's just what it is, guys. So you got to be careful. I think what you got to be doing is using big time frames, looking for those key levels to almost undercut and then rally or blow off to the top and then come back down. So hey,
Yeah,
it's just
because
something that if they're seeing it, I think we should look for it.
the VIX, a lot of people don't know this, but
Look at the
VIX
SPY. SPY is a good example of it today.
could move. So I think it's divided by 16. I think that's what it is. So
Yeah.
the VIX is just a number, which is what is the expected average daily move in the market, right? So if you take
Mhm.
24 and you divide it by 16, yeah, 1.5. So the SPY is basically at this price expected to have about a 1.5% move a day. That's all the VIX is, the amount of people that are buying and selling options. So that's why when Mitch is saying, well, if you're expecting, let's do the same thing. If the VIX was at 14, which was down here before the kind of sell off, and you divide that by 16, That's, you know, a 0.87 move a day. So basically we are going to be expecting twice as much movement every single day on the market right now than we were before. So what happens, that's why you're getting these wild intraday fluctuations, because people are buying this insurance on the market, and the VIX is expressing that by saying this is the price of the value of what's going to happen each and every day. So a higher VIX just means way more SPY fluctuations, which again, you either deal with, probably the way you should deal with it is sizing down, right? Understanding that you might need to be a little looser, you know, with your trade, because you're going to get this move, and, you know, figuring out kind of what happens from there. But yeah, that's, and I told you about my buddy who, he has a rule. If the VIX is over 20, he's a day trader. The VIX is under 20, he's a swing trader. And I'm like, that's, to me, that's kind of brilliant. He's got strategies for both, and he just toggles, right? Am I day trading? Am I swing trading? Because he's like, if the SPY is going to move 1.5% a day, it means, you know, a 5% move in Tesla is going to be fine.
Long on Soxel, guys. Long on Soxel here. Holding resistance. I didn't want to cut in there too much, but
no, it's just, right, just backing up what you're saying there, that we're going to get these crazy moves as long as the VIX is elevated. The VIX will come down, the SPY
that's
won't
exactly
move as
it,
much.
man.
It's right. Again,
And that's why some traders, like you said, stay on the sideline when these moments happen, because the strategies that you normally see working, sometimes they're just not going to work in a heightened VIX environment. So that's another thing to put in your, like, I talk about Playbook, but Playbook also isn't only about like what stocks I'm looking for. It's also about understanding your current environment. So every single morning, you should be like kind of telling yourself what current environment you're in. So a lot of traders do this with like a trader's checklist. I know, I'm sure you've seen these, Michael, where traders every single day, they're like kind of going through a checklist to just start their day, right? Like, hey, this is what I see right now. We'll take the assessment tomorrow. We'll take an assessment every day. And then you could take like a weekly assessment, right? Things like that.
David, I think it's David Cox. I'm just looking at him now. He does the, he's
You've seen that one too, right? I think that one's one of my favorite checklists. I've seen it too, Michael. Hey, good eyes, man. Good eyes see good eyes, right? Like
he's a Canadian David Cox. Yeah, let's see if I can find one. Portfolio manager at Raymond James, right? So not just some, you know, random guy like us. I don't think he posted anymore, but he did for a while.
Yeah.
But yeah, he has and he actually prints it off. This is what I think probably caught both of our eyes. Yeah, it's very
exactly.
It's very old school. He prints it off. He
love it.
goes through and he does check marks, and he does, right. And this is part of his morning process. Again, portfolio manager at Raymond James, not right, just some dude. Raymond James is a pretty reputable Canadian fund manager. But yeah, so he prints this off. And then he goes, okay, let's just go through my list and see what's going on. So he talks about the TSX comp. There's going to be a lot of Canadian stuff in here because he is Canadian, but high beta versus low beta. He's got this checklist of defense versus off, small caps versus large caps. And he checks, and all of these things are bearish. So he's like, okay, if I'm going to do anything, it's going to be from a protective or more bearish side of things. And then if all of these things are lighting up bullish, I'm going to own the SPY. And he built this watch list over time, or these things that he considers bullish or bearish, again, just for his time frame, which as an investment advisor is going to be a big deal. And again, it does this every morning. Again, the thing that caught my eyes, you can tell this is, comes into the office, he hits print on the printer, right? Prints it off. He grabs an old school pen and he goes through and
I love it, man. I love it. He gave a checklist for, is it the bottom, right? Things like that. Like, you know, VIX and spike signal bounce, new lows in the S&P 500. These are the types of things, right? Like as you learn further and further into your financial journey, right? You're going to find certain things that you might want to just check off before you take a trade. And these just keep you in exactly that, in check. And as a trader, that's one of our number one jobs, right? It's not necessarily always just to make money, but also just to make sure that we are catching ourselves. I call it, for like a book, The Observer, right? Be the observer in your own trading, right? Like, know what's going on, right? If you don't, you're going to fall into a rut.
I've got my own book for this. I Absolutely. Audiobook on this one too, because again, I don't have time to read. So I'm a big Audible dude.
Love it. Love it.
Could not recommend this enough. Has nothing to do with trading, but I think is one of the most important trading books, period, for traders. And it's the Checklist Manifesto. So what he was trying to do, just a quick summary, is he was trying to go in and say, okay, I expect that the richer the country, the less deaths there should be because of surgeries. And this was like in the 50s and 60s. Didn't find it true. Some countries that were very, very poor had less accidental surgery deaths. Some countries that were very rich, like America, had a whole lot of them. So he went all through the world. And then he did the same thing with airline crashes, again, back in the 60s and 70s when it was more likely. And he found it didn't have anything to do with how good the technology was of the country. Both of these things had to do with whether or not they had a checklist. So whether or not what changed, it dropped the amount of accidental surgery deaths in America by half, was that the lead nurse, had a checklist. Did you do this? Did you do this? Did you do this? Did you do this? And it transformed, again, saved millions of lives by doing this. And it's the same with trading, right? Again, you see this kind of stuff with what I talk about with these systems, right? Right? Is it been above VWAP for a long time? Yep. Blue arrow. Yep. Risk. Here it is. Right. Traders very manually do this all the time, whether or not they know they're doing it or not. It's just having that list to say, okay, this is the one to skip. This is the one to take. I think it just offloads a lot of calculation, just as, right, here, I've got this list. If it meets the list, I'll take the trade. If not, I don't need to be like emotionally attached to kind of whatever's going on there. I can offload a lot of that thinking.
I think that's a really interesting way, guys. Like always, I would definitely recommend you guys keep up with the traders that you feel you learn from, right? I think it's so important. And that's why you'll see it. I have a tendency of bringing these guys up, catching moments like that. I think checklists like that always can keep you on top of your game. And it helps to decipher through the noise, right? I mean, there's always noise every single day. It's how can you work your way through that noise? What are the certain things you need to be looking for? And what things have a tendency of working more than others? Intel still holding on here. I think it might make a third resistance trend line attempt towards 24.15 here. Doesn't mean it's going to break out there, but it could just make a third touch for the trend line towards like 24.10, something like that. We'll see if it gets back up there. Intel just put in that kind of liquidity down move there where it stops some traders through towards 23, like kind of 55. I think 58 was the low there. We'll see if it goes back to the 24. And Intel is one of those, man. I didn't know about the new CEO coming in because it dang sure to try to swing trade that yesterday. But I just felt it, man. I just felt like the volume that was showing up on the daily charts just showed me more and more. Yeah, we made a round trip on that recent action, but that washed out a lot of the bulls. And I think that with the positive catalyst, it just keeps flowing. Whenever I see that and the stock is being held back, I think it's just a matter of the market kind of agreeing, right? Like, so the market hasn't been agreeing with positive action right now. Even if you have good earnings, you're still seeing the hits down, right? So when that changes, when we start to see maybe a good earnings report actually get the appreciation, or when we start to see maybe like a catalyst driven name right now, like Intel, continue a day 2, day 3 style move. Those are the things that I think I want to see to start seeing that, yeah, the bulls are back here and able to at least put in a defense into certain names. So then it becomes the stock pickers environment, right? I think that's what we're going to, where there's going to be certain names you're like, why is that even up? Well, it doesn't matter sometimes, right? There's going to be some names that are going to now uncorrelate with the downward trend that we're in and get that uplift. And then there's going to be names that are going to be kind of just garbage, right? And those are going to keep going down. And it's not just all the names that are going to get the bounce. I think a part of this is also just finally the whole like kind of AI boom that we were in, that if you turn back the clocks and see everyone in January, what are they saying? They're saying that we're in the early innings of AI, when it was the complete opposite. It was in the late innings of what I think is the large language models AI. which is completely different than AI in generalization, right? So a lot of people try to generalize AI, and that's not what I think happens here. So what I think happens here is you're going to see a split between this kind of just, okay, we're just using Chat GPT versus actual AI that's been built to make products happen. Like, I think in the medical space, you'll see continued AI growth because that's a little bit different. That's not just large language model going out there, right? In the robotic space, that's still something I want to watch for 2025. That's still something that AI can get into, right? The autonomous space, still something that I want to continue to watch. Now, the large language model thing just got broken and it was just DeepSeek. There's always something that comes out that breaks it. I still remember in kind of the NFT space and the crypto environment, what did we start to see? Well, we started to see collapse underneath it, right? We started to see hacks, different hacks started to show up and started to kind of break the environment. Then certain NFT projects just started falling out the sky. So I think that this happens, guys. We get into these hype driven markets. And I think this is going to happen in a faster cycle moving forward. And I think a lot of it has to do with, and it's just another conversation, but payment for order flow, free commissions. I think that's actually created faster swings of cycles from bull to bear because of the amount of pure trading that can go on nowadays versus what used to happen. It used to have to, really think about if you were going to go long or short. I don't think people even consider that anymore. Like
the
they just
degen
take,
economy is how Howard
yeah.
Lindzen, who's the CEO of StockTwits, and that's how he calls it, is that as soon as we did that, we unleashed, right? Everything kind of turned a little bit more into a betting market.
I agree. And I think that's why like I was a proponent of like, no, just keep some fees. Like the fees actually keep decisions from not being just like pointless. Like where I can just be like, oh, well, I'll just do it. Right. Because when it costs you something to take a decision, just the decision itself, I think that is something that you should be thinking about when you take trades, right? Like if this trade cost me $50 to take the trade, would I still take the trade? It's not going to really cost you $50, but maybe just asking ourselves that can be the determining factor if you distinguish between A or B plus setup, something like that, right? You're like, okay, on A plus setups, you shouldn't struggle with that mentality. You should be like, oh, I'll risk $50 just to start the trade. Yeah, let's go. But on B and C's, you might be like, I don't know.
And, yeah, people still made money back then, right? Read the old Market Wizard series, right? These guys were trading in the 50s and 60s. But yeah, it was just more of you had to have conviction. And they're good and down things.
Conviction.
Like it's one of those, for me personally, as a systematic kind of like, the way I look at it is that it's not going back, right?
Yeah,
so
it's not going back. That's the truth.
You've got to adapt. So that's why I'm just becoming kind of faster and more robotic with things. Where
and that's
in Canada, we banned it, right? I think America is the only place in the world that allowed the payment for order flow. So yeah, there's a lot of merits on keeping it banned. I would say most people, like if you're just every 2 weeks putting a couple bucks into your 401k, you saved a lot of money by doing that, right? Yeah, they're gonna, you're buying your SPY every 2 weeks. Citadel is gonna take a half a penny or a penny on the trade, but overall you're saving money. It's the active trader again that is really, I think, more hurt by it. But you just need to adapt, right? You need to find
that's what it is. It's just like that's just in the environment we're in. But I also say that sometimes like this changes up the way the trading is, right? Like I sometimes say like I'm not the biggest proponent of like kind of just Warren Buffett trading style, because I feel like in this kind of market things change and things change all the time. Like I know that a lot of people kind of have a tendency of kind of maybe pulling like even strategies from like, let's say somebody that was trading in the 60s or 70s. That might not work in this market, guys. Things are different. And I think that one of the things is you got to really do what Michael does all the time. Test it. See if it works. Because there's going to be a lot of knowledge that's in books. It just doesn't work. It just doesn't work anymore in this trading environment, right? And in this day and age. So, hey, one thing that I will say, and just to wrap up the day, is congratulations. I didn't get a chance to say it, my friend.
Thanks, man.
That's a hell of a good job. And one of the things that I appreciate is it's not only just taking it, right? Because you've taken trades, you've taken bigger ones, you've taken other ones, but you went through the ups and downs and worked through it. Guys, remember that that's what the important thing's about. And trust me, you'll appreciate the journey more than you'll appreciate getting that email, right? You're like, oh, well, I worked my way through it. And that's what the fun part is. So always remembering that and focusing on that the journey is the important part that gets us to success. It's not that just the view of success and then you're there. So focus on the little things, the little habits that you can make to make improvements. Maybe it's more systemizing your strategy, right? Like you're seeing Michael do, right? Maybe it's focusing on risk to return and realizing that you're taking a mental 2-to-1, but then when you look at your numbers, it's 1-to-1, right? So adjusting things like that, the small things are what makes the difference between the winning trader and the losing trader.
Yeah, make sure your focus is not on passing the eval. It's by building a strategy that you can repeat going forward, right?
Yeah.
I, again, blew up a bunch of them. I can show you guys on a later episode.
I mean,
but now I'm fairly confident that this is a strategy I can bring to the live market, and over time will end up making me money. So that's because that's the goal. No point in getting the account pass and then just blowing it up, right? So,
All right, it's good to see you guys in the chat. We'll see you guys, of course, back on Monday. Smash the like. I hope you guys enjoyed it. It's good to see you guys out there, like always. And keep battling in your trading journey. It's not just one way. And we'll be here to battle with you guys. Hit the like before you get out of here.